Hi, Richard here on the 11th of January, being a Tuesday, and we're into the new year, and the dollar, Aussie dollar, that we're looking at now has pushed down quite considerably. The break has occurred. This long-term trend line since June last year has held up very nicely. I'm not sure that the head and shoulders pattern is still in play, although left shoulder head and right shoulder it got taken out. But needless to say, since the 3rd of January we've come down very heavily and pushed through this trend line, now on its way to the south. These are old targets I've left in place here at 96.50. I would say that that's the first port of call, and that was based on an old Fibonacci target, so expect this to continue down. However, that's in the medium term. In the short term, I would expect an ABC, because on a shorter term time frame we can count 5 very clear waves down, meaning that this should by rights reverse, test this line, and then continue south. Now that would be in line with the broader indices as well. So let's have a look at the Dow just to see where that's at. And you know, it's been in this grinding, creeping uptrend. The market forecast tells us that the trend has been off for about 8 days now. The relative strength has gone from it, but we don't have a signal to the downside. So at this point you'd be trailing stop losses under here at 11,455 and under here at 11,500. So we're yet to see what's occurring, but the news in Europe is particularly grim. They're talking about holders of senior debt having to help bail out any further sovereign default potential by some of those countries such as Portugal, Spain or Italy, but that's subsequent to the issue in Ireland that created of course a bailout there. So the euro has traded off as a result, but the broader indices have actually held up. Looking at the Australian indice, you can see that we're trading between this pincer type move here. We have been short for probably 5 or 6 days now, but the downside target is 46.50. In the event that's broken, and remember that the Aussie dollar has broken through quite significantly there, then we could track further south. But still, the Australian market, this is the SPY, and it has been going sideways since September last year, is looking for further direction. Certainly there is indications from the relative strength indicator which suggests that as we've touched the lower line, it's retraced up to about the 50 point, the midpoint, and that would indicate that further lows are likely. So we can see that this is pushing down as we speak, and I wouldn't be surprised to see that 1160 to 1150 taken out in short order. Looking at the US dollar index, if I can find it, the US dollar index has done this very large candle up. We've been talking about this trend being in place to the upside for a long time. Market forecast is tracking it beautifully, and at the moment it's testing the 50 moving average. You know, wouldn't be surprised to see it track back down to 79 or 80, but the momentum is certainly to the upside, which would suggest that gold and those commodity currencies such as the Australian dollar are going to come off. Moving to the euro, just to show you what's going on there. You know, it reversed after testing this line at 1.345 and has done a 1-2, so this looks impulsive, these moves. 5 days of impulsive move to the downside. Certainly we can change that to short, because that was put in place prior to the Christmas break, but we've had a very significant move to the downside now, almost 3.5% last week, and this is on top of this 800 pip move here, which is really significant. So things, as I said earlier, are very grim in Europe, and really could be a catalyst for further downside. And the fear is, of course, that credit, as it contracts, and the major banks stop lending to each other, but yet focus on their obligations and their own internal balance sheets, we will likely see this move down to 1.27, and that could happen in very, very short order. That said, we have had 5 waves down on the shorter term time frame here, which is similar to the Aussie dollar, and the expectation is for a bit of an ABC up, although I guess the thing could just really die in its own right. And you know, even as we speak, it's 9 o'clock at night now on Tuesday, we're seeing some downside push to continue that. So looking at gold, that's the gold weekly, sorry, that's silver actually. The silver weekly, we can see that it tested this long-term overhead resistance. Market forecast, I mean, this has just been an absolutely spectacular trend. Market forecast is showing that the relative strength has dropped off, and indeed we're rallying up slightly on today's activity, but the activity, the expectation is for you know, a further move to the downside. Going to gold, it is not quite as pronounced as the silver index, but we've got this triple top that's occurred here. We had a massive sell-off you know, on the 4th of January, and then we're just sort of retracing a little bit of ground here, even though it's struggling to come back up. But expectation is for it to move back up towards the 50, so this is an 11 period moving average, and then I would expect this to be a wave 1 down, and excuse me, wave 1 down, up for 2, and then we will push down quite heavily to 1262. So yes, my view is bearish. In the event that 1430 is taken out, these triple top high, then we'd look to 1463 as the target. But at the moment, we would be, the opportunity, the feature opportunity is to sell into these rallies. So as it comes up and then we get a confirmation day to the downside, that would be the trigger to go short, and that should be a pretty good ride in the event that we get these sorts of moves down you know, over a number of days. Final chart we can have a look at is well, in fact there's a couple of others. Let's look at what's happening in the financial sector. You know, really weak. There is no joy here at all. There's no strength. We've got this grinding trend to the downside, and really the only thing that's holding the market up is the materials sector, and that in itself has hit its highs here at about 14,250 and is moving to the downside now, ready to test this long-term trend line. In the event that we get a breakthrough, that will be a short opportunity, and indeed stocks such as BHP and Rio and any number of others will move rapidly down if that indeed is the case. But this is a wave 3. This is a impulsive move to the upside. Big reversal candle here, down for 4, up for completion at 5. We've got divergence here between this high and on the market forecast and this high. So that divergence suggests that there is inherent weakness in the trade. It's not to say that we won't get a short-term move to the upside to retrace possibly 38.2 or 50 or even 61.8%, but then watch for this line to be broken to the downside. Let me see if I can find oil, and there is oil. That gives us a very good read on what's happening. We saw over Christmas the highs were tested at 92.40, rapidly traded off, and then we're just reclaiming a bit of ground, but certainly the market forecaster suggests we're all for the short side, and I wouldn't be surprised to see this bottom line here, which is moving up at probably about 15 cents per day, but the target would be in the $84 vicinity in the event that everything else comes off. So whilst I'm particularly bearish, that's it from the market forecaster. for more information, go have a look at the charts online, and I'll give an update prior to the end of the week. Cheers.